Everybody, I'm going to talk to you guys about a spread trade we did today on the micro NQ versus the micro Russell, which is M2K. So what you see here in front of my screen is basically a line chart comparing all four equity futures, which is, I'll open this up here, which is NASDAQ, Dow, RTY, ES. Okay, so we got NASDAQ, Big Tech, the Dow, basically large caps, ES, large caps, and then Russell, small cap, okay? Remove this super trend from here. And what I look for when I come in the day, and let's see if I could show you guys here off of like FinViz. You could use this FinViz tool. Let the market kind of digest the first half an hour. If you get an early start with these, that's fine, but you want to see like who's leading versus who's falling. A lot of times there's going to be continuation on the spreads because spreads aren't going to be as whipsawy. You're spreading one leg, one market versus the other. Those of you that know me for years, this is where I started. I found my edge in spreading because it fit my personality, right? And you can day trade these, especially with some of the volatility that's available these days. And the way that we can put these legs together, I'm going to show you one that we did today in our Apex account. Then I'll also show you where you can open a live account if you're interested in that, because you need to have a unique broker that knows what spreads are, is a specialist at it, and has account capabilities for it. Okay, if you're going to be swing trading spreads too. So again, I'm coming in and I'm looking at and I'm seeing that, you know, this yellow line, Russell, which all yesterday, last couple of days, a lot of big money flow in Russell, while some of the other markets were sideways. So if you found yourself chopped up in ES and things like that, there's reasons for that. And there's alternative trading edges you can do in hedging, you know. And so we figured these two markets will converge, right? You know, a lot of these equities that are correlated will diverge and converge, divergence and convergence. And so a lot of people that are mean reverters will just wait for extremes and then trade these in like they did today, where obviously they're taking profits probably by now, and they'll wait for those. But daily you can trade high performer leader versus followers by just standing on the sideline a little bit, let everybody do what they're going to do, and then find, you know, if you want to trade energy, you know, find the one that fits you. Like I was going to do a tut spread, would have been nice to short the twos and buy the tens. That's a pretty affordable spread. We could actually do that even in an Apex account, even a 25K account you can do, because they only allow you, what, 4 minis, and this actually requires only 3. You know, I'd be doing 1 2-year versus 2 10-year stint. And again, I'm going to show you guys intraday on the NQ why that doesn't matter as far as the ratios. So once we find the leader versus follower, I want to put that together, and I'm going to put it together here. And my charts, usually my spread charts always look like this. You know, short time, 1 to 3 minutes, sometimes 5 minutes, and I'm looking at pullbacks off a super trend. I love to use my super trend on spreads because they actually have really clean pullbacks to them, and super trends use ATR, which is why I like it. When you get a real mover, your pullbacks are going to usually touch that the super trend well because of its ATR capability, average to range. And so this market breaks. MNQ is up, has a pullback. We missed it. I get in right about here. I know we took a couple $100 off. I didn't write the whole thing, but that's not the point of this video. I'm going to show you guys what, you know, where it is now in dollar cents. Okay. That's your move right there. It's about $375. If you got in like super clean ninja move pullback, then you're up $448 today. You know, very tight stop under the ATR, right? So usually if this fails, that just means that on the grander scheme of the things, that Russell just continued being bought up and NQ kept being sold. That doesn't happen for too many days in a row. You're going to have sectors rotating, money flow in and out. And again, like I said, when something diverges far from it, it's going to converge back together. So there's plenty of ways to play this. You could do mean reversion strategies. Again, like I said, I'm trying to find something every day. So I want to, what I do is I'll put the spread together as one unique thing. And here on TradingView, if you guys want this, you need to get the Pro Plus minimum to be able to put these on as a synthetic kind of a composite symbol, right? And that's all I'm doing, right? And you want to get better at writing them out. But what it can do relative, people say, well, you need the right, oh, let's talk about ratios. How do you ratio this? I see the question coming up in a lot of other people's feeds. If you're going to swing trade something, you want to have the proper ratios for the purpose of span margining from the CME. You know, if you're going to trade a certain kind of a grain spread or something like this, or calendar spread, whatever, you need to have the correct, if it's the intermarket, you know, like some kind of grain versus another type of grain, whatever. Let's talk equities to keep it simple for all intents and purposes, because most of you guys are equities traders, is you need to have the correct amount of ratio. Like, you know, I'll put a list here of a recent ratio that I did for all the equities futures. Based on their notional value, you're equalizing the dollar out of that spread. And if you don't have the correct, spreads on in ratio, then yeah, you'll have a big margin requirement to hold overnight. So those are important for that. I've talked to traders about this. They say, oh, but the tail wags the dog on one or the other. You want that. And let me explain why. You're still directional intraday if you're going to use this item here, like NQ versus the Russell or RTY. Let me fix this actually. This is supposed to say M2K. There you go. Boom. It's going to be the same thing. Just want to be transparent. So one would say if I'm going to hold this, like the real notional ratio would be 3 Russells and one NQ. But here's the deal. Let me show you something when I do that. If I only did 1 micro NQ and 2 and 3 Russells, my entry is in the same spot. Price action is the same, but my total profit right now currently is $160, and I probably risked, you know, $30 to make $160. The risk reward is okay. It's great. It's 5-1. Right? Wait, where's the risk reward? 6-1 almost. And still could maybe continue higher as it's pulling back here, you guys see. But the deal is that if I put an even 3-3, I'm going to make more money, and I'm directional anyway. So here's where the position is now. Now it's $450 now. We did $200 because we have certain rules with the Apex account that I'm doing. Like in this case here, you know, you got 5 of these things, and we're doing this thing as part of a micro challenge too. For those of you guys that look at the prior videos, I was trying to build a plan on how you could do micro challenge and come up to 180 grand a year income, and how you can manage that doing micros. Well, you know, this says it's a total of like $1,000 that you spread across 5 accounts, and we have certain thresholds we do here. Plus, I don't want to damage this account because this one got a little bit skewed with outright trading, which promised myself not to do anymore. But that's my circumstances, so I'm just doing a little bit every day, and that's part of my rules. Again, if you guys wanted to find out about spread trading, contract calculators, how to build ratios, I found a pretty cool actual individual that gives a free Excel calculator for this. And what it looks like is, let's see if I can pull this up. Spread trading calculator. It'll look something like this. And then let me enlarge this, where you could actually put in, you know, MNQ, whatever, MES, and then you could put your contract multiplier, you know, 2, 5, whatever that price is at that time. Where are we trading at now on MNQ? Let's just say 13,888. 4,700, whatever, 4,300 ES, just, you know, and it's going to give you a variance, and this way you'll know, okay, 1 MNQ, 2, you know, whatever, and you can hone this in. I think, what was the current, I think, where were we at with, you know, ES3 NQ2 is what I had, and I think what it does is, so it just brings the variance down. So you're bringing, sorry guys, got cut off. So basically what you're doing is you're bringing down the total, the notionals together, and you're eliminating that dollar waiting on it. I don't know if that got cut off on my part of the video where I mentioned, whenever you're trading these markets, you are trading against the dollar. And so you're trying to make the dollar neutral out of your spread. And by putting the notionals in line and getting the correct ratio, that's how you're doing that. And of course, then your broker gives you, and your exchange gives you the proper span margin to swing trade. For day trading, guys, look, I mean, it's not that hard to come and pick the weakest versus strongest. I don't know why a lot of people don't want to do it. And trade one versus the other. And this is how, after you find those two, then you just pair them and make a composite. I mean, look what happened yesterday, like market could have been, like I said, chopping up, doing whatever, but we know that which one is smoother. So you took this short, if you took it in the morning, or you took it even if you took it on a pullback, I'm going to be realistic, and took a continuation into the close, risking $100, you make $400, and you have a ratio return on your money of about almost, again, 6 to 1. But here's the deal. Which one is easier to trade intraday and hang on to and not have as much emotion, have much stops, and all this high frequency, intense stuff? I'm not trying to hate. I'm just saying, I have more difficulty doing that versus trading like this. It works for me. And again, the days you're going to get chopped, it's because probably you didn't pick the strongest versus the weakest. There's always going to be one versus the other that's going to give you opportunity. Then you just take it and ride it. So it's identifying, doing research, finding who's performing better than the other, putting that together as a composite, putting together your ratio plan, how much you're willing to risk reward. And, I'm able to do all this here in TradingView. And I have TradeStation tied in as an API for my data because that way everything is live and I can calculate everything and see everything live time, right? So that's how you do that, guys. Hope you enjoyed that little video tip and that it helps some of you guys out. Oh, and lastly, if you guys want to get more information from my site, you go to viperfutures.com. If you want to open up directly a good broker that has spread trading available, this guy's a pro right here. You want to talk to Trey Lazara, contact him, open an account today, click this form, you'll get his info. Let him know that Viper sent you, and he'll give you like the best commissions, and the guy has a lot of knowledge. You gotta remember, when you're dealing with specialty trading, you want to have a specialist broker that knows exactly what you're doing. He sees your account, he understands what you're trying to do, versus just letting you blow yourself out. One of these just typical big national brokers that'll just take your money and not pay attention to your account. He'll understand what you're trying to do, and then guide you the right way with the right platform. Okay, so obviously if you want to do spreads, he has a really nice platform for that called Trade Pro Trinity. And you can get all his contact info by coming to our site here. Check that out. I'm just referring. It's not a sales pitch. I know the guy knows his stuff. That's all I gotta say. And that's about it. So it's just something I wanted to share with you guys, a little update. I know I've been working on my own stuff, guys, lately, and I do videos kind of as I go because that's just where our business leads us. We don't do these things every day. When we find something good, full of information we want to share with you guys that'll help you out in your game, then we make these videos. Additionally, obviously there's popular spreads out there like interest rate spreads. Obviously there's a bunch of ratios from the CME and the Treasury Department available for you guys for that, but we're not going to get into all that today. Just wanted to show you guys the power of putting on spread and hedging your risk even intraday on some of these unique instruments that you can use to do intraday trading with, not have too many stop, be able to ride a move more, and have a little bit more consistency and longevity in your game. It's an option. If you're having trouble outright trading, if it's not feeling like it's for you, don't feel you have to quit. Know that you have options. You can do intraday with spreads. Just depends how you put everything together. Depends who's giving you the information and knowledge, without it costing you much or an arm and a leg. And, easy peasy. Obviously legally can't say that, but in reality it is. So Everybody take care until the next video. If you have any questions about these spreads or anything like that, hey, email us or just send a comment below. Actually, this is where we're trying to keep everything here on YouTube because time constraints. All right, everybody, take care. Oh yeah, one more thing. Sorry. Somebody mentioned I don't want to pay commissions or something like this. Let me see if I can get it. Oh, it's too much more commissions or something. Look, I mean, this spread cost me like $10 per account to make a couple $100. It was a really low stress trade. I'm willing to pay, and my broker and the exchange all these fees to do this kind of business. I mean, big deal. I pay $51 to make $1,009. I'll do it all day long. I don't really care. Not all of this goes to your broker. There's all these kind of fees they have to pay. So they're like making like 50 cents, $1 off of each one of those. Maybe like out of this whole $10, they might make a few bucks. I don't really care. That's their business. They got to pay their bills too. So I just don't understand why on commissions people get so anal or redundant about it. I think when you think that way, your account won't grow. It'll grow just as small. You're thinking so small. Guys got to stop thinking that but I want to pay like no commission. Well, then go and get a crappy platform if one exists out there, and just want to share that with you guys. It's the cost of doing business. I keep getting that question every now and then. It kind of gets irritating. All right, everybody, take care.